What's up, everybody? This is Jimmy with Trading Decoded, and it is Monday, March 10th, 2025. Happy birthday, Shane. We had another bleeder today. Guys, I don't really want to make a video today because all I got to share with you is the same thing. This stuff works so often that all of these videos are redundant. So what I'm going to ask from you is two things. Number one, consider buying my book. Not because it makes me rich by any means, a whopping $3 a book, which, by the way, Amazon, when are you going to pay me? And I would like to make some YouTube shorts. If you guys could kindly give me a list of topics to make quick 1-minute videos on, I'd really appreciate it. I want these videos to be helpful, short, and just useful. So if you could help me with that, I would love you long time. All right, but without further ado, let's go ahead and take a look at the charts and see what we did. By the way, we crushed it today as a community. You could check that out right here. Pretty amazing. Good job, guys. Super proud of you. Hopefully we can get this kind of movement more often and just have this many people on the right side of it. But anyway, let's go ahead and take a look at the charts and see what we had going on. Well, I took one trade today, and that one ended up being a 24.3% win. It was a good day. But those contracts ended up being worth literally a down payment on a house. So that's annoying. But you know what? I was done working 3 minutes after the market opened. So for me, that's the dream job. But at any rate, what were we looking for? Well, we have a put line, as we always do. On the Qs, it was 483.35. We were looking for that to bring us down to at least the orange line. And if we got through the orange line, we were hoping for the pink line. But we have the halfway point in between there. And, you know, it's always worth considering that. Not only that, when Qs and SPY are coming down to a level of support at the same time, you want to always consider taking profits there. And if you're not, just move your stops into place so that if it does hold that support and bounces up, you get out with something. All right. But long and short of it was, what threw me off here and why I didn't get in all the way up here, I got in maybe halfway through the printing of this candle, was the fact that in the open, Qs were trying to print red. ADD printed a big red, but SPY was going up. It was a little uncomfortable. Now, SPY got up to a level of resistance. And I said to everybody, you know, I like this to the downside. We haven't broken the downtrend line in the Qs. If we get back below this orange line of support, I'm going to go ahead and take my puts, hope to at least make it down to the next orange line. As fortune would have it, ADD started to print a little red, which kept me involved in wanting to hold on to that trade a little bit longer. And then we got down to the next line where we started to trail it. Things were expensive today, as they are going to be for quite some time going forward. So it's not really worth messing around trying to hold for more, especially if you're getting 25% in a minute and a half. That's good money. But for me, that was it. However, we did hit support on both charts. We bounced off said support. And on both charts at 937, we put in our favorite little thing called a higher low. Well, a higher low usually means we're going to break resistance, not hold it. And so as long as ADD is moving in your favor, and we were talking about this the entire time, I said, guys, this is not something I'd feel comfortable taking, but all the signs that we would normally look for on any other day would tell us that this is more likely to move up. Now, where up to? Well, the problem for me was resistances were too close on the Qs, okay? I don't trade the SPY chart per se, and I know that doesn't make sense because, well, I trade SPX contracts, but the Qs control just about everything I do. Why? Because you look at this right here. SPY was nowhere near its resistance line up here. It should have been here. I guess it was kind of close, but it's still 30 cents away. But Qs was at resistance. See, Qs will stop SPY dead in its tracks very, very often. So if I'm looking to get into a trade, I need to know that the Qs have room to move, not SPY so much, okay? There are some occasions where you decide to take a trade because the Qs have room, but then SPY hits a level of support resistance and stops. But it's very unusual, okay? Especially in these times. But at this point in time, we put in a higher low, we recognize it. We had a wedge at the time, and I told everybody if we break this wedge to the upside, which is more likely because not only we put in a higher low, ADD is pushing up, just know where your problem areas are on the Qs. First one is going to be right here, the resistance that held this morning right into the pre-market. By the way, I was ready for puts because we were putting in lower highs leading into the open. That's why. But if we get through this wedge and up to that resistance, which by the way was a 50-cent move, you had to be quick. And if we get through that, we're looking for the next lower high up, which we touched right here. And I think that ended up being the high of the day on both charts. So for those of you who bought calls because of higher lows, ADD printing green, you got in a little aggressively, you made 50 to 80 cents of a move. That's pretty good. That usually pays out pretty well. Only to hit resistance that was pretty nasty. And then ADD just kind of moved sideways. I had to explain this to some people today. ADD is never a reason that I will take a trade. It might keep me out of taking a trade. It might help me stay into a trade longer. But if the Qs are moving down and SPY is moving up and ADD is moving up, I'm not going to take calls. I don't trade against the Qs. Okay, it's just one of my personal rules. It doesn't always work for me, but that's just the way I trade. So I don't trade against the Qs. So if ADD is rocket shipping up, but the Qs are struggling to move higher, I'm not comfortable playing calls. I want to make that very, very clear because, well, it's important. It's important, especially if you're trying to learn how to trade the way that I do. All right. But shortly after that move to the upside, ADD started to pull back a little bit, and then it really just picked a direction and kept going for the rest of the day. So ADD wasn't so much a problem. What we had to find was, well, the same things we always look for. So we broke the uptrend, or what would have been an uptrend line, this green line, and where are we expecting it to go? The next support, right here. Okay, we knew that. It made it there. It held. Now, if it holds and it bounces up, what you need to see is it run back up to resistance. It didn't get there, which makes this a lower high. Well, as you know, lower highs are not only bad for calls, but they're also more likely to cause a break of the support than not. And take a look at ADD at the time. It is printing red. So, lower high, we're expecting this to not only break the support, but come down to the next support. Well, it did that in two short candles, and then it continued to move down with ADD's help. We closed below that. We're looking for the pink line. We get the pink line. We don't like to mess with the pink line. The pink line's the stink line. That is the line that I respect the most on any chart. So I will always suggest you consider taking profits, whether SPY hits the pink line or Qs hit the pink line, no matter what. And you can see why. So not only did the Qs hit the pink line, SPY was landing on a support level as well. And again, guys, I know it seems like there's a lot of lines on these charts. They're spread pretty far apart, okay? These are decent sized moves and really big candles. So pullbacks are scary. You know, money comes quick. It's weird times that we're in. However, we do pull back to resistance while ADD is, well, still trending down. And SPY almost to resistance. Pullbacks during a downtrend are your best time to buy your puts, guys. What are we expecting because this is a lower high? You bet. You guessed it. Lower highs are more likely to break support. Which support? The one we just came off of. And it does exactly that. So we are then looking for the next support down. Well, we had two lines within close proximity of each other at that point. So guys, if we were to get through that, we should head down to 479, even money. Well, since people got into this trade up here, they held it all the way down here, and it worked out well. And then we struggled to move through it. However, SPY was also hitting its pink line, the line we'd like to respect on either chart. So entries and exits based on Qs or SPY were lining up with each other. It was a beautiful day. Then we finally broke through that support. And as we move down, we put in a lower high. Okay, so Qs and SPY were pulling back to a resistance level, which in this case was the trend line. In this case, it was a line of support turned resistance. We're expecting it to come down to the next support. Guys, it's the same thing over and over and over again. And pullbacks are better if we talked about this trade before it was a trade. I said, If we close below this line on the Qs, the next target is all the way down at 475.59. I was amazed by this because it was almost a $3 run down. Reminding people, it's way safer to buy pullbacks than it is to aggressively buy closes. I mean, you're buying the low of day essentially in this sense of the matter. It's risky. If you're going to do that, you better know where your resistance is. In our case, we had a trend line here. We had the double top here. So a close back above this, or at least the trend line, would have been your stop loss if you bought in on this candle. If you bought in on the pullback, you had nothing to worry about. The trend line is your stop loss. What we're hoping for is that smooth, sweet, buttery, almost $3 move from 478.21 to 475.59. And as you can see, it maintained a pretty healthy downtrend all the way down to that point. That was the last trade of the day that we really talked about, because I get off the mic at 12 o'clock and there wasn't a whole lot left happening at that point, and there wasn't a whole lot left people trading at that point. Now, the market did continue to sell off throughout the day, and you know, she's correcting a bit, and it's probably painful for your long-term portfolios. Guys, this too shall pass. The market always recovers 100% of the time, so if you got money on the sidelines and you're not a day trader, consider dollar cost averaging. As we move down, it's going to recover. I promise. All right. Now, for those of you who are day trading, these are big moves. There's plenty of room here to make quick money. There's always room to follow rules. And when you do, you might be surprised as to how often or how much your win rate can possibly increase. All right. Now, limiting the number of your trades is also a huge benefit to your win rate. Trust me, I've never met a person that has told me the more trades they take per day, the higher their win rate gets. Okay? FOMO is a big deal, especially on big moving days. Hesitation's a problem for a lot of people because of how expensive things are. You just got to be aware of where your weaknesses are, address them, don't try and hide from them, don't try to ignore them. It will cost you money. Embrace them. Know that if you trade later in the day and your win rate's lower because of that, it's probably because theta is more aggressive. Volume's usually a little bit less. It's tougher to trade at that time. That is something I found out when I started to pay attention to it. My win rate drops below 50% after 12 o'clock. Hence the reason I don't trade after 12 o'clock. I didn't try and figure out how to continue to trade after 12. I just fixed the problem by not trading after 12 o'clock. And it worked wonders for my profit and loss on a monthly and annual basis. So just be aware of where your struggles are, and there may not be a way to fix them, because sometimes it's easier to just avoid them. With that said, guys, if you're interested at all, and I hate to keep pitching it, but it's super important because it helps a lot, get my book. It's not cheap, but it's not small. It's packed with information. It's a 200-page book. It's a legit book. And it's very, very helpful, and it explains everything that I use to make and find the trades that I take. So in conjunction with being in my Discord community, watching my free videos, and the information that's in that book, you should be very well versed on exactly how it is that I find the trades that I find before they're trades. Okay, it's not a crystal ball, it's not magic, and it's certainly not luck. It was nice to have a bunch of new people in the group today. I hope today proved to you, not that you were there for validation, that it is possible to see a lot of these great moving trades before they happen, which is really what we're looking to do and what I'm trying to teach you. All right, so with that said, I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, there is a link down below. We'd love to have you. And by the way, I did fix it. Apparently it wasn't working, but now it should be. And yeah, I hope you all had a fantastic day in the markets. Till tomorrow, I love you guys. See you.